Right, good morning then everyone as we head into European trade on Tuesday the 3rd of September. A little bit of a shortened week, Labour Day in the US yesterday, so US markets short, bond markets, equity markets, certainly the cash markets. I mean, futures were trading on the equities, although they had early finishes and stuff, but yeah, maybe, or not maybe, a bit of a shortened week, certainly from the US side of things. So today kind of becomes Monday, relatively choppy markets yesterday, not too much going on, which is completely understandable when the Americans are not open for business. Apart from that, heading into today, really the big movers overnight are the Australian dollar and the Kiwi dollar, kind of driven more by the Australian dollar, but iron ore prices have taken a tumble over the last 24 hours, 7.2% down the last time I checked, about 10 or 15 minutes ago. So pretty aggressive downside in iron ore. Australia obviously a large exporter of iron ore, so the fact that the price of iron ore is down aggressively means the Australian dollar sells off the back of that as well. Nothing really backed by data or any of that sort of stuff, just simply iron ore prices down negative for the Australian dollar. That's kind of where the movement has come from overnight. Stocks on tiptoe ahead of US payrolls. Okay, that's more probably tiptoeing because the cash markets haven't been trading so far this week, but they're still likely to be a little bit jittery, you'd imagine, into the jobs report that we get out on Friday. Obviously September's since August's jobs report, we had a yearly revision to non-farm payrolls, which is 818,000 jobs less than what the markets have thought, or less than what the figures have printed over the course of the year through to end of March 2024. So which is what, 68,000 jobs a month on average, less than what we were originally told. So jobs market weaker than we thought, loosening weaker than we thought, and that kind of has implications and brings forward the prospect of interest rate cuts. So if you get another weak jobs report on Friday, you're likely to see the US dollar sell off. I don't know about stocks in that example. I mean, stocks like weak data because it prompts interest rate cuts, but now we're going to get the interest rate cuts regardless of what the data says. Negative data is probably negative for stocks in that situation. So we'll see how that pans out a little bit later on. We do have the manufacturing print out of US a little bit later on at about 3 o'clock today, which we'll get around to now in a minute. But apart from that, it's really what we've got going on across markets. You can see the equities a bit of downside, but they're all relatively mixed, so not really too much to see there, obviously in line with it being Labour Day yesterday. Commodities slightly lower, but crude slightly higher, Brent slightly lower. It's not something you see too often, but commodities across the board a little bit negative in today's session. But as I said, iron ore prices down pretty aggressively. Bond markets just open for trade so far this week, so I'm not going to read too much into that, although the yield curve is nearly re-inverting. Right, 2 years still slightly above the 10-year. You can see 0.2% higher than the 10-year. May potentially re-invert today and go back the other way. Something like 780 days the yield curve has been inverted, which is the longest amount of time since the Great Depression of 1929. So kind of historical day potentially in the bond markets, but the fact that that's going the opposite direction, I mean, is that a positive? I'm not so sure. I think if we are getting negativity, the negativity is still to come. So it's not normally wrong, the bond market, when pricing in a recession, although it's been that way for over 2 years. We haven't quite got it just yet. So we'll have to see how that pans out. US dollar slightly strong. Probably just some risk off the table after a pretty negative month or so in August for the US dollar. Your Aussie and your Kiwi down, like I've already said, and that is kind of where we are at across markets this morning. You can see your Aussie and your Kiwi down pretty aggressively. Dollar CAD kind of trending higher as well. None of the rest of these are really moving with the same sort of aggression. Obviously the Aussie and Kiwi have iron ore to contend with. Euro dollar is a bit sideways. Cable keeps going lower, right? A bit of a pullback for now, still a pullback for now. I do still think that goes higher. I'm kind of hoping it might reject that trend line. Obviously we got this green arrow there last week, but hasn't panned out and we've gone straight through it. Trend is down at the moment, certainly on this time frame. So if you are going to go along that, you got to wait for that to shift. So a bit of patience required with that, but there's absolutely no problem. We'll see how that pans out in the coming days. But US dollars, having a pretty good bounce back at this point in time, but Let's see how long that decides to last. Equity markets just a bit all over the place, as you can see. No surprise with no cash trading yesterday. You can see the S&P, the Dow Jones, the Nasdaq, the Russell, all a bit all over the place. You can zoom out a bit, and they're all lacking a clear direction. Dow Jones is probably the one with clear direction. I mean, it continues to grind its way higher. Certainly not with any sort of aggressiveness, but it is still grinding its way higher. The DAX, the FTSE, the Nikkei, all just kind of hanging out up here, up at the highs. Again, lack of volatility due to the US being closed yesterday. Bond market's definitely something to keep an eye on in today's session, as I said, and that is your iron ore price. As you can see over the last 24 hours, this section of price here, pretty aggressive downside. It continues its way lower at this point in time. So let's see how that pans out in coming days ahead. If that continues to trend lower, Aussie and Kiwi should be pretty simple sells, as this downside here hasn't really reflected in the price of the Australian dollar, Kiwi dollar. Right, that continues lower. The fact that it has started to affect it would mean that lower iron ore prices, the more they continue to go lower, the more negative it is for those respective countries. So we'll see how that pans out over the next few days. But for me, I still think the Australian dollar is a decent buy, to be perfectly honest. But you got iron ore to contend with. That keeps going lower, I wouldn't buy it. If iron ore took a turnaround and started to push higher, that's a different question, and you'd absolutely look to be long the Australian dollar. So tradable opportunities now at this point in time. I still think cable maybe requires a bit of patience off that. Let's see if the manufacturing PMI can spark any movement higher. As you can see, where we at? Tuesday, ISM manufacturing PMI 3 o'clock today. Let's see how that pans out. Expected to be negative. See, does it come in more negative economic data? Certainly manufacturing figures have not been great from the US in recent months. If that continues, or that pushes lower again, comes in below consensus, that should be a situation where the US dollar weakens. Then I think cable is your trade of choice.